Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTWSYS008 traders, and our website is www.stochastic-magdi.com. The title of the video is Dow Jones Trading on the Edge. All right. This is a very important video for day traders, for swing traders, for investors, because we're going to highlight some important technical analysis in this video. And I want traders to pay attention carefully. If you trade Dow Jones or you trade any stocks, you need to pay attention carefully to what we are about to discuss in this video. All right, we use a Google map, to navigate through the city, to know where we are, to help us find places. The same thing when we are trading, we use key levels, all right, patterns, all right, market patterns, to navigate through this messy market. So for the Dow Jones, what we're going to do today is to know exactly what we need to pay attention to throughout this year, 2014, all right. And so we can make excellent decisions. Otherwise, we're going to go round, and without knowing, without having any direction, all right? So we want to have a plan, a strategy, and know, where are the pitfalls, where are the key levels, where is the value zones, all right? What we need to know about this, Dow Jones Index. The Dow Jones Index is what we call a market indicator. We have technical indicators. We have also market indicators. The Dow Jones is a market indicator. Crude oil is a market indicator. Gold is a market indicator. Silver is a market indicator. And when we are analyzing the Dow Jones, we are analyzing a market indicator. All right? Sometimes a technical indicator may give a signal that it is completely opposite to the market indicator itself, that will create a bit of conflict, which means we are fighting the market instead of flowing with the market. The first thing I need to say to traders today is that as long as, I said this before in one of our videos, it's crucial, as long as the Dow Jones Index remains below the level of 16588, priority to sell signal. Now, sometimes when I say something like this, new traders say, just say sell, and they go and sell. It means that when we receive a valid signal, a valid sell signal below the level of 16588, we will sell. We will take that signal. All right? We want to give priority to sell signal below that level. So when we are buying below the level of 16588, it's risky, and we need to be careful. That's what I meant by what priority to sell signal below 16588. That level is the high of the year 2013. If the price failed to display a new higher high after a higher low, is bearish. Here, if the Dow Jones failed to go above the level of 16588, is bearish. Now, when the price is going down, the price does not go down in a straight line. There are levels the price is looking for, what? A better support level. But as the price is going down, the price will be in a declining channel. Always. This is what we call the market patterns. So, in order to make excellent decisions, we want to know what we want to give priority to. So, by looking at the chart itself here, the second thing trader must remember throughout this year is that there is a high probability that the market may try to retest the level around, the 14000 level, the 14,000 level. Last year, we went above that level, a key level, which is in the zone of, in fact, if I put it here, the blue horizontal line, it's in the zone of, call it, 14,000, in the zone of 14,000 up to 14,100. Okay, the price break above that key resistance level, which is bullish, very often the market will not continue to go up anyhow. They will prefer a validation of a key level. This is what the price is doing all the time. You break above, if the price breaks above a major resistance level, 70% of the time or 75% of the time, the market will prefer to retest that resistance level, to convert that resistance level or to validate that resistance level as a support level before the bullish momentum may continue. This is just a precaution so that we are not just buying on a weak foundation. We want a solid foundation. That's why the validation of support and resistance level is the key to successful trading and successful investment. So because we break above the level of 14,000 last year, there is a high chance the market may prefer to retest it or to convert the resistance level as a support level. As the price coming down, there are key levels that we need to pay attention to. The one that we have seen last week is the short-term equilibrium price level at 16166. That level has been rejected. If we go to the hourly chart, okay, that's the level here. The short-term equilibrium price level 16166 is rejected. If we look carefully on the hourly chart, we can see that the price is doing okay. The price is going to create what we call a cycle point. The cycle point, price starts the move here and return back to the starting point. That's what we call a cycle point. There is a cycle point here for the Dow Jones, which is at right now is at call it 15741. 15741. So because the short-term equilibrium price level has been rejected, we will see the market may try to retest it first and see whether it's a solid okay, resistance. But because we have a cycle point here, in my view, the market will push it down to this zone, okay, the level that I just tell you now, 157, okay, call it 157, in the zone of 15700, call it 15700. All right, there's a cycle point at 15700. In fact, what I will do now, I will call out that line into black, okay? That's the black line there. In the zone of 15700. So the short-term equilibrium price level is kaput. As I was telling you last time, I said the price now equilibrium price level, price reaches a support level. If the price finds support, the price will go in a rising channel. It did not go in a rising channel. So when the price reaches a support level, do not just buy like old-fashioned day traders. Wait for the price on your signal time frame to go at least into a rising channel. If you want to sell at a resistance level, do not just place a trade to sell. Okay, wait for the price to go into a declining channel at a resistance zone. All right, so the short-term equilibrium price level is kaput, price taken out, and now the next key level is the cycle point in the zone of 15700. As you can see, the market pattern here on the hourly chart is what? It's a declining channel. If you have been buying like this, you are taking a risky trade, all right, as for day trading purposes, talking to day traders, all right, you have been, okay, taking a risky trade, and you need to be careful. If you want to buy at a support level, in your entry time frame, the price must go into a rising channel at least, and you want to pull back in a rising channel after the price has displayed a higher high. So it came out of this first blue channel. Now the second blue channel, the projection of the first one brought us near the cycle point here. All right, going to remove this line now, so to avoid that the video is too long. So as I said to you at the beginning of this video, as long as the Dow Jones remain below the high of 2013, prior to sell signal, as the price going down, we are watching key level. The first one is the short-term equilibrium price level at 16166, has been rejected. The next key level that we must watch, this is critical. If you trade in Dow Jones, you want to know the key levels Otherwise, it's like you are trading blindly. And a professional will push you up and down. And you'll be wondering what's going on. All right, so it's not good. The next key level is at a 14846. 14846. That's the median line of the year 2013. 14846. You don't want to forget these key levels. This is the exact median line for the year 2013. The exact level, all right, at the 14846. So now, as the price is coming down, if it's come near the level of 14846, that's a psychological price level. That median line, the peak line, is a psychological price level. We need to watch it carefully. If we find a support here, we can buy. But as the price, if we find a support, we buy here, and the price start going up again. Remember the short-term equilibrium price here at 16166. All right. So as we are pushing it down, pushing it down, pushing it down, if the bearish momentum continues, the level, because the price is going down in a declining channel, we want to know where is the next support level, where are the key support level, because the price is going down, the price is looking for a better support level. This will allow us to navigate through this messy market where decisions are made, okay, investment decisions are made, okay. One of them is 14846. So the first key level is the high of last year. As long as we remain below the 16588, so we are starting to adopt the mindset of the professional traders, because professional will tell you, they will say, if the Dow Jones remain, you see them on Bloomberg, you see them, okay, talking in Financial Times, they will say to you clearly, George, or whoever you are, as long as this Dow Jones remain below the 16588, we will be bearish, which is normal. But they will say, attention to the median line at 14846. Let's move on. If the price is below that level, all right, the level of the key resistance level that we have mentioned before, which we break above it last year, the level of 14,000. Do not forget that level. So if the median line fails to support the price, we are likely to retest last year's resistance level in the zone of 14,000. Now, if that level fell, the next key level we must watch is the low of 2013 at 13104. Now, trader will say to me, George, so I should sell. Now, look for opportunity to sell below the 16588. If you receive a bullish signal, you will take it. If you receive a bullish signal below that level, be careful. If one is trading E-mini, one is trading Dow Jones or any stock listed on the Dow 30, one must pay attention to the market indicator, which is the Dow Jones itself. All right, know the key level, where is the price, what is happening right now. Last year, we break above the level of 14,000 bullishly. We close bullishly above it. Now, very often the market may try to retest it, that resistance level. As the price going down, does not mean that the price will definitely reach that level. The price can change direction tomorrow and next week. If it goes back above the 16588, do not fight it. If you find a support, it break above the high of last year, displaying a new higher high, and you find a support above it, and start going up in a rising channel. Always, if you want to buy in a rising channel, which means you are not fighting the market, you are not fighting the market principle, you are not fighting the market patterns. Last week we were posting a video on Facebook page, and I do a little bit of exercise with traders. The first week I was posting video before the market is open. This week I was directing traders to key levels, and I can see something else has happened, all right? So you want to buy in a rising channel after the price pullback. But if I can show you here on this chart talking about trading on the edge. Trading on the edge is about trading at a low risk point where there is a value, taking a valid signal. So if we start drawing lines on these charts, For trader who wants to know more about trading on the edge, go to www.stochasticmarket.com, click on trading on the edge. Now, if the price is going up, all right, the price will be in a rising channel. Now, if it's not in a rising channel, either it's in a consolidation mode, which means the horizontal channel, like this. So it's not going to go for long. It will go to the next resistance level. But again, though the market pattern is horizontal, if it's going up, to a certain degree, it will be in a rising channel on another time frame. So if on a weekly chart, we have a consolidation pattern, if it's going up, on a daily chart, we will see a rising channel like this. But the price does not go up in a straight line. We may see it coming down before going up. But if the momentum is bullish, the final destination is up. All right? So we can draw within another channel. You see this first channel horizontal. We have a rising channel. Within this rising channel, small one, and we can have also declining channel. All right, which means the price pull back a little bit. It's difficult for me to draw it on this chart. The price may pull back a little bit, and then again resume, the up move. All right, so when we want to trade, we want to align the market pattern. Which one are you trading? From the higher time frame, you are dropping it down, but at the time when you are about to enter the trade, you are pulling out your wallet. You want to make sure that the price is not violating, the market pattern or the time frame in which you are entering the trade. Which means if the market pattern has changed, if for instance you are selling in a declining channel and the price break above the declining channel, you will close that trade. All right, this is about Dow Jones trading on the edge. Now, trader may say to me, George, why are you speaking like this? Because you are my friend, and I don't want you to make a lot of mistakes consistently, all right? So these are the key levels, as we use Google Map, or to navigate through the city, all right? We want to go to X, we want to go to A, we want to go to B, we want to know the best, the best route that we can take, the safest routes, and also the shortest route, so we can save time, so we can avoid making a lot of mistakes. Or you are visiting a city that you do not understand, you want to use the map of the city, all right? So this will be your guide. The same thing we do in trading. We're looking for market pattern, we're looking for key levels, we're looking at the market pattern itself, so we don't violate the market and start fighting the market, which means price going up, we are selling, you are fighting the market in that case, all right? Price going down, price in a declining channel, and you are buying, you are taking a risky trade, which is possible. But you want to be aware that you are taking at least a risky trade so you can pull out quickly if the music has changed. To achieve consistent winning trade, one must be able to trade around key level, on the edge of a rising channel, on the edge of a declining channel, on the edge of a horizontal channel, at a low risk point. All right? One should be able to understand the language of the price. So on this yearly chart, what the price has done, we can see that it was bullish first. Now in this session here, it's a consolidation. So the market pattern was not violated. So there was first in this session, we have a rising channel. There are three things that the market is doing all the time. And if we just pay attention to that and work with that alone, we will be avoiding a lot of mistakes. Now, after the rising channel, we see now what we see? We see horizontal channel. Now, a new channel is about to begin here. We will see it's still in place. It can change and become again horizontal. No one knows until we see a new high above this one here. All right. So in normal condition, price will go up and break above a key level. 70% of the time, the market will prefer to retest as a resistance level. But it's not guaranteed, but it's happening all the time. But it doesn't mean that we have to force it. But if the market is doing exactly that, repeating the pattern that it has done before, well, we will take advantage of it. So the line that we are watching is the high of last year. So if you don't go above that high, we want to be bearish instead. But we are bearish doesn't mean that we are selling when the price is in a rising channel. All right, you remember the channel, within a channel and a channel. All right, so Though the channel may be going down, within a declining channel, we have a smaller, okay, rising channel. So which means the price rising a little bit in a declining channel. But if the momentum is strong, okay, those buyers, okay, will be sold down. So in order to sell, you want buyers, yes or no? The same thing when we want to sell, we want the price to go up first. And then we wait for a signal. Wait for a signal. Wait for the candle to close. One of the strategies that the professionals are using, which we can talk about now, is the closing of a candle. So you are a day trader, you're on the hourly chart, you see a buy signal, okay? You want to buy, but the hourly candle is not yet closed. What do you need to do? You can either wait until the hourly candle is completely closed before you place a trade, or if you are in a hurry, then you will go at least to the 30-minute chart and say, okay, what's happening on the 30-minute chart? What is the pattern? So here, if I want to buy, on the hourly chart, the candle is not closed. If I'm here, I will have drawn a line below the previous low right here. All right? So I will say to myself, because this candle here is not yet closed on my 30-minute chart, if I want to buy, I'll prefer the price to go at least above, okay, the previous low here. Or if I'm too much in a hurry and I don't want to wait, I'm very impatient, I'm very aggressive, I am a gambler, all right, which we shouldn't be, all right. So we will go to the 15-minute chart. Wait for the candle to close. This is how the professional trading. So today is what? Today is, what's the date today? 26th? Yes, 26th of January 2014. Now, so we are on the week, if you go for instance for the weekly chart, this candle here on the weekly chart is now closed. Okay, so we can analyze the candlestick pattern here. All right? I think I've said enough about Dow Jones trading on the edge, and I hope you have learned something from it and we put it to use to make excellent decision. Apart from the key level that we have discussed today, there are also what we call the 6 critical price level. Trader may go to www.articlebase.com to check the video that we call, with the article that we call Trading Critical Price Level. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.